All right, pessimism could be quite intense post the FOMC decision. In fact, that's what we saw after a bunch of important data came out of the US as well, such as the CPI data, which was last week. But with that, let's move on to the final update from our global market wrap. European markets also ended Friday's trading session lower. So the French CAC index slipped 1.5%. It's up on your screen. The German DAX was 1.5% lower as well. And the British FTSE index closed with cuts of around 45 points. In fact, inflation in the Eurozone region rose by a record 9.1% annually in August. We told you this on Friday as well. And consumer price inflation was up 0.6% month over month. Core inflation rose by 5.5% annually. Meanwhile, the European Central Bank's chief economist has said that the ECB could raise interest rates into next year as well as it tries to rein in inflation. He also did not rule out the likelihood of a recession. So these are some important comments that you should keep your eye out on. But that's everything that's going on globally. Let's talk about how all of the overnight cues could impact the market. We have our research team joining us right now, and they're going to take us through the trade setup this morning. Rima, Mangalam, as well as Vivek join us with exactly that. Guys, a very good morning to all of you. And Rima, let me come across to you first. We were just going through the global setup, and definitely, once again, it does not look positive.
No, it does not. As you pointed out, U.S. markets ended at two-month lows. The key indices, the Dow, the Nasdaq, ended with losses of about 0.5% to 1% on Friday. The S&P 500 and the Nasdaq have also seen their worst weekly fall since June of this year. And the focus is going to be on what the Fed does. And it's not just about the magnitude of rate hike, whether we get a 75 basis points hike this Wednesday or a 100 basis points rate hike. But this is also going to be the quarter where they will give you the projection, the dot plot projection. And that will give you an indication of the terminal rate and how long interest rates in the U.S. are going to remain very high. The CME Fed Watch tool seems to suggest there is now an 18% probability of an outsized, supersized 100 basis points rate hike on Wednesday following the inflation print that we got last week. The U.S. 10-year yield now stands at levels of 3.45%. The dollar index hovering close to 110, while Brent crude prices is at about $92 per barrel. The Indian market had a brutal sell-off, particularly on Friday. We managed to hold on to that 17,500 mark, but that's going to be watched very closely. Resistance will be seen at that 17,700 to 17,800 mark. In terms of flows, the FIs sold about 3,260 crore in cash, while the DIs bought 36 crore in the cash market. But the numbers would have been impacted by the rebalancing which took place. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues that we should watch as we get into a fresh trading session. But we